Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the focus on the Qs, the Nasdaq 100 today. But we're also going to do a quick update on IWM. I talked about the Russell 2000 ETF several weeks ago, entitled the video 5 Down. I want to talk about that. We're going to do a quick update on that, look at a couple of our indicators, and then check in on the biggest mover and to the upside and downside in the Magnificent Seven. Okay, let's start off here with the side-by-side of the industrials, the S&P 500 and the Nasdaq. The Dow was up 1,057 points this week, so it continues to push higher, closing, it hit all-time high. It's closing at a new all-time high on the weekly basis and intra-week basis also. Now, the S&P 500, not quite as much. You could see this dashed line right here at 4818.62 is the all-time intra-week high. We haven't quite gotten there at this point anyway, and we've been up for, what, 6 weeks in a row? Or is that 6 or 7? No, it's 7. 7 weeks in a row. Now, the Nasdaq 100 index is sitting at a new all-time high, but intra-week, it did not get there in terms of hitting that 16,669.77 level. We're very, very close, but not quite there. When we take a look at the side-by-side view on the industrials versus the transports, this is what jumps out at me on the transports. It was up 805 points this week, pretty big move. But I put this dashed line across because what I did was I created a parallel to this line right here. This has the potential, if we turn down, to turn into some kind of a head and shoulders consolidation type pattern. Or you could say it's a top, but it's not really the top. I mean, here's the top over here, the high that occurred at the end of October of 21. So we'll see if we get any kind of movement back down to the downside here. But again, I do this just kind of as a reference point, just to remind myself to think about that perspective. Okay, so let's go back, take a look at the home page over here. We're looking at the Qs. Actually, before I go to the Qs, I want to go to IWM and revisit that. So here's what I'm talking about. The Elliott wave count that I've got on IWM is this. And I was talking about this move right here several weeks ago and said, well, this is clearly a 5-wave move, and it looks like this is the direction that we're heading down in. Well, the fact that we punched on Thursday above the beginning of that 5-wave move invalidates it. There's no way this can be 1-2 because we went beyond the beginning of that wave. Okay, so then you got to sit back and say, okay, what else is the market telling me? All right, so there is no doubt in my mind that this is a 5-wave move down. Okay, so now what could this be? So I looked at it and said, well, it's got to either be an A wave or a C wave. Well, it looks to me like it's a C wave. And if it's a C wave, what does that mean? Well, then you look at everything that's been going on since this low over here in October of 22, and it looks to me like a big, this has been very complicated and messy sideways type move. There's just no doubt. So this looks like a combined corrective double zigzag WXY. Now, the Y is still, it's either hit at the high this week, it's the end of it, or it's getting very close. We'll see how far this wants to push, if it wants to push even higher. But this big move in between here, this X wave, this ABC flat for an X move, X wave in here, is what this looks like to me. And when you have an Elliott wave flat, you have a 3, 3, and a 5. And there's our 5-wave move for the ABC. Okay, so that's what it looks like to me. And then we're looking at being in primary wave B finishing here. Now, when I look at Y versus W, okay, I'm looking at this in terms of this combined corrective move. Okay, here's where Y equals W. We punched slightly above that. So if we were to continue to push higher, what's the next Fibonacci relationship that I would be looking at? It would be up here at 214 at 138%. But we're just slightly above where Y equals W. So be watching for a turnaround. That's what I'm on alert for. So that's the picture that we've got. Now, the other thing I wanted to mention is, let me go back to the moving average view. Look at this, what just happened this week. Let me kind of stretch this out a little bit. Okay. This move, not this week, but this since that low in October, okay, we had what, 2, 4, 6, 7 weeks. Actually, 41 or 33 trading days. 33 trading days, 38.37 points. Back over here in the summer of 22, we had 39.21 points in 41 trading days. So this move was faster, a little bit more powerful, but almost exactly the same length of move in here. I think that's really, really interesting because you start to look at this and think, well, wow, we're off in some major new thing, like major bull market or something. Not so fast. Not so fast. I just don't think so. I think this is very similar. And when we look at the Elliott wave picture, here's what I think is happening. And yes, it's been very challenging. There's no doubt about it when you look at what's been going on ever since June of 22. Okay. So this is the best take I've got at this moment. We'll see if we start to roll over and turn down. So far, it hasn't done it yet. That's what we're on alert for. Okay, enough on the Russell. Let's take a look at the Nasdaq 100. Okay, so here are the Qs. The Qs were up 195 on Friday, up 1317 for the week. So big, strong move that we've had in here. When I look at the Elliott wave picture, and let me zoom in because I just want to look at this daily. First, I guess we could start off with this. Here's what we're looking at. I think we've got, again, a double zigzag that's underway. W, X, Y, and the Y is an ABC. Now, the real question is, what kind of a length C wave are we going to get? So when we drill down and take a look at what's going on in the C wave, the problem we've got is that we've got very minimal corrective activity that's going on. I mean, you almost, your default is you want to sit back and say, well, it looks like 1, 2. But you know, this second wave in here hardly retraced anything. It's actually less than 23% of this move right here. So you look at it and say, well, what else could be going on? Well, here's where I'm looking at this as a big extended first wave. It's possible that you could label this as 1, 2, strong 3, this is 4, and we're into the fifth wave. That's an alternate. I also have a second alternate, and I show it over here on this where I've got intermediate wave 2 because this isn't invalidated yet. Okay, this is no longer valid if we do punch to a newer high in here, but we could label this as a 5 wave like this, and it's valid, except it's only valid as long as the fifth wave doesn't go above this. But why? Because the third wave can never be the shortest wave. Okay, and right now this third wave is slightly shorter than the first wave at this labeling. Okay, therefore that means this fifth wave has to be less than the third wave so that this does not become the shortest wave. And right now, that's the way it is. It's fine right here if it rolls over and does not punch to a higher high. This is a 130-minute chart, 3 bars to the day. And so the first bar of the day on Friday was the high on Friday, right here. Okay, getting a little bit of divergence showing up on the RSI between here and here. So again, watching to see, does this start to roll over? All right, so that's the picture. A couple of possibilities. Yes, this has been very, very strong. There's no doubt. We're just going to have to watch and see. I mean, I really think that if we come down and take out this low, then this wave count that I've got in here, it goes away, because they shouldn't do that if this wave count is underway. All right. But again, this is really, really shallow for a wave 2. So that's, there's several things that just give you pause when you take a look at it. I mean, it's just, that's the way it sits. All right. That's the picture on the Qs. Let's take a look at the McClellan Oscillator. Here's what's going on with that. So since November 3rd, so right in here is November 3rd, we have had nothing but divergence in here, with the market going to higher highs, and this is not confirming that move whatsoever. Now the Summation Index, which is a cumulative of the oscillator, it has continued to push higher, and it's sitting at 2891, getting close to where we were sitting at the end of July in here. And back up here is where we were at the beginning of February. Remember, we had that Groundhog Day was the kind of the peak on February 2nd, and then back here in July, and then here we are now. So that's the picture, non-confirmation on the McClellan Oscillator, watching to see how does the market respond here over the next week or two. The percent of stocks above their 50-day moving average. That's another one I watch every day, and I want to take a look. Let me just look right here. Let's just drill in, and I think I punched the wrong thing. I did. This is what I want to look at right here. Okay, in the S&P 500. Okay, the percent of stocks above their 50-day moving average in the S&P. So this is the 80% level. This is the 90% level. And then here's the moving averages, the 10-day, 21-day. And right now, we're watching this very, very closely, okay? And we're starting to get tightened in here. We're just a few days above that 80% level. Have we punched above the 90 before? Yeah. 3 closes back over here in December a year ago. 3 closes above it, and then that was all she wrote. And then in August of 22, 5 closes above it, and then it came down and rolled over and sold off hard. So yeah, we're very, very extended in here. And by the way, that reminds me of something else I wanted to show you. Here's a tweet Jesse put out during the week. He was talking about this comment that came out Bank of America, and this is an article, I guess, in Reuters. Inflows to equities in the past 8 weeks totaling $74 billion, the most in an 8-week period since March of 22. That's pretty interesting. Since March of 22. That was the first counter trend rally, basically the beginning of the whole bear move, the first part of the first leg down of the bear move that happened in 22. And it reminds me of one of Bob Farrell's rules, Wall Street legend Bob Farrell. Number 5, the public buys the most at the top and the least at the bottom. And then you see that kind of statistic come out, and you're like, looks familiar. Okay, so let's take a look at a couple of the biggest movers in the, well, actually, let's just take a look at the biggest mover in the Magnificent Seven this week. Let me scroll down here. Tesla. Tesla was up 4% on the week. Okay, so here's the daily and weekly view. 4% on the week, but the thing that caught my eye was the break of this trend line on Thursday. It looks like it's trying to break out, okay? And again, this is corrective move from the July high, series of, lower peaks, lower lows in here, but now it looks like it's trying to break out to the upside. The other thing that is the biggest mover to the downside of the Magnificent Seven, that was Google. It was, for the week, again, that's the daily, down $2.39, 1.8% on the week. Pretty choppy looking type movement. I've talked about Google before, but this is what really caught my eye when I looked at the daily chart in here. It looks like a potential diamond top. Okay, now granted, it's kind of stretched out a little bit, but the more you zoom out, the more it does look like a little diamond top. Okay, So it's going to be really interesting to see, does Google continue to roll over, break down, take out this low, and start coming south? Okay. All right. That's it for this video. If you thought the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great rest of the week, and we'll talk to you on the next video.